The Federal Reserve will make its next interest rate decision at the end of the month. The CME Fed Watch tracks where investors believe rates are heading. It gives an 80% chance, 80%, that the Fed will leave them unchanged and a 20% chance of a quarter-point hike. Fed Chair Kevin Warsh offered few clues when he spoke yesterday at a forum in Portugal. He noted instead that the economy has been hit by several shocks, including the AI boom.
The AI boom is showing itself first and very prominently in the United States. I'd certainly rather have this problem where we have massive capital expenditures instead of thinking years back where we had financial engineering, where we had companies that weren't able to deliver profits, so they would do shareholder buybacks. Well, right now they're investing in the future because their expectation is the supply side of the economy will expand. And if it does, that has huge implications for monetary policy.
Vanguard Senior U.S. Economist Josh Hirt joins me now from Pennsylvania. Good to see you. So at first blush, what do you make of not just the June numbers, but again, as I say, the eye-popping revisions here?
Ironically, we were expecting a number not so dissimilar, actually, from what we ended up seeing today. We were expecting just around 40,000 jobs today. So in light of that, our surprise was rather limited to, I think, what the market was expecting today. But I think as your point, if you step back a little bit, I mean, we do see the labor market as actually being in a rather resilient place. It's certainly a different job creation numbers that we're seeing from, a year or two ago when we were very accustomed to seeing well into the hundreds, even 200 plus monthly gains per month. But the reality is this is where we think the break-even job growth rate is. It's much below 100, and we don't see it as being too far away from actually a pretty equilibrium rate at the current moment.
Yeah, so it doesn't sound so much to worry about at this point in time. And so the next move is Kevin Warsh's, right? Do you think he will still raise rate throughout the fall, despite the lackluster job growth? I mean, even in the Portugal forum yesterday, he seemed to really be emphasizing price stability.
Absolutely. I mean, I think we've certainly picked up on that as well. As there's a lot more discussion and focus apparently coming out of the June meeting on the inflation mandate. I mean, I think the statement and some of the communication from the meeting characterized the labor market fairly consistently with what we saw today, which is that we think the labor market is growing consistently with the labor force. It doesn't appear to be a major concern at the moment. While on the other hand, we do have inflation that's been creeping up and has certainly got a lot more attention just from the data that we've received so far this year, as well as the trajectory. Absolutely, we're expecting that we're in a holding pattern at the moment. I think the data that we've seen from inflation has certainly started to skew some of the expectations for hikes. But our view is that we're in a hold, not a hike environment, at least at present.
At least at present, so we'll wait to see what happens, especially as that issue has become so political. In terms of the revisions themselves, I mean, Kevin Warsh himself has said, not so subtly, that he's not clear on the data he's getting. It's one of the reforms that he's launched at the Fed. Do you think that that's a good move here, that they need better data?
Well, there's no question that the revision process can be something that creates a wedge between what's really happening in the economy today and where we're able to read that. So I think it is a very interesting initiative. I think we're also very eager to see what the task force will come up with in terms of new data or suggestions. But there does appear to be a focus on really capturing in a more real-time manner how the economy is performing. So I think we're just as interested as many others to see, what kind of methods might they be introducing, whether that's data, whether that's new methods of actually capturing the data to try to create some more real-time measures of a look at that. At the same time, I'd also say we have a lot of data in the economy, very robust set of alternative indicators. So I think there are a lot of ways that we can start to square how the economy is really doing, but very interested to see what the task force will come up with.
Yeah, and maybe will they come up with more real-time insights, as you say, because sometimes we see things developing, especially you, in terms of going out there and actually speaking to businesses, and yet it doesn't show up in the data, at least not in a timely fashion. I mean, look, the Dow hit a record today. I'm not sure how much stock you put in that, to use a term. This is quite an extraordinary bull market going into the 250th anniversary of the country. You think corporate profits really warrant this at this point?
Well, there's no question we've seen a pretty tremendous effect, I think, from the wealth effect side and the asset price side. In our view, it's absolutely having an effect as well on consumption, on the direction of the economy at the moment. The wealth effect has been something we've actually seen for probably the past 18 months or so. Very healthy asset price gains that we've continued to see. We do have a view that that is being supported currently by earnings. So it's very clear to us that we are seeing some momentum in the economy, and we do expect that to continue into 2027, in fact.
Into 2027, so the bull market continues, even if there is that sector rotation there. Josh Hirt, happy 4th to you, and thanks for giving us some insight into these numbers. Appreciate it.
Thank you.